Microsoft has been one of the biggest beneficiaries of the rising effectiveness of artificial intelligence. Of course, Microsoft has made a huge investment in OpenAI, the creator of ChatGPT. But how much is Microsoft stock really worth? I'm going to answer that question in this video, conducting a discounted cash flow valuation of Microsoft stock. I'm going to share with you precisely where I'm getting all of the estimates and assumptions I'm using to create this valuation, so you can determine yourself if my valuation is on point, too optimistic, or too pessimistic. So let's take a look at the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, of course I need Microsoft's current market price, which is $417 per share as of this recording. And I need Microsoft's market capitalization, which is $3.1 trillion. I'm also going to need Microsoft's cash and equivalents balance, which stands at $18.32 billion as of the latest quarterly update, and Microsoft's long-term debt, which stands at $51.63 billion. We're not done yet. We also need Microsoft's average diluted shares outstanding count, which stands at 7.475 billion, and we need Microsoft's free cash flow number of 74 billion. That's the baseline. I'm going to grow the free cash flow to conduct this free cash flow valuation analysis. The growth rate I'm going to use in the short run for increasing free cash flow is its estimate for earnings per share growth over the next 5 years. The analysts on Wall Street that are following Microsoft stock, they expect it will grow its earnings per share by 14.6% over the next 5 years. Keep in mind, I'm using an earnings per share growth estimate to forecast free cash flows. Keep that in mind. And then to calculate the weighted average cost of capital, I'm going to need Microsoft's beta, which stands at 0.9 according to Yahoo Finance. All right, now that we have all the estimates and assumptions and numbers that we need to conduct our valuation, I can go ahead and share with you my valuation model for Microsoft stock. Let me first draw your attention to this number here. Free cash flows, $74 billion for 2024. That's the latest estimate, or that's the latest number for Microsoft, its free cash flows. This is the baseline where I'm going to grow its free cash flows over the next 6 years. Now, over the next 5 years, I'm using the short-term growth rate of 14.6% to grow Microsoft's free cash flow estimates. And then in the 6th year, I'm assuming that Microsoft will settle down into its long-term growth rate of 5%. Now, if I was doing this more thoroughly, I would have had a transition period before the company settled down into its long-term growth rate. But for the sake of simplicity, I've assumed that Microsoft's growth rate will abruptly slow down to its long-term growth rate in 2030 at 5%. Now, when I conduct those estimates, I get a present value of all of its free cash flows over the next 5 years of $433 billion. Now, the reason why we need to get the present value of all of these free cash flow estimates over the next 5 years is because money in the future is not worth as much as money today. And so if we're going to get money in the future, we need to discount that because it's not worth as much, right? All of you watching would prefer to have $100 in your pocket today versus $100 in your pocket 5 years from now. If you have to wait 5 years for that $100, it's worth less to you today. That's the theory behind the present value of future cash flows. Now, from 2030 onward, instead of discounting and forecasting each of those cash flows between the year 2030 and infinity, we're going to collect all of those future cash flows at one point in time. This is called getting the terminal value or horizon value. And that horizon value at year 2029 is $3.982 trillion for Microsoft stock. Now, we're not finished yet because we need the present value of this horizon value, which comes to $2.6 trillion. So total, the value of operations for Microsoft stock is a little over $3.38 trillion, $3.038 trillion. And if you're wondering what's the weighted average cost of capital I'm using to discount these cash flows, it is 0.0886, in other words, 8.86% discount rate for Microsoft stock using the beta of 0.9. The capital asset pricing model gives me a cost of equity of 8.9% and a cost of debt of 0.65%. In other words, 6.5% for the cost of debt. The company's total market capitalization is 3.1 trillion and it has 51.6 billion in debt. All right, so now that we have the company's value of operations, we can start to arrive at the price per share we think Microsoft stock is worth. So from the value of operations, we need to add its cash, which I highlighted at the beginning of the video, was $18.32 billion. And then we need to subtract its debt, which I highlighted was $51.63 billion. That will give us the value of equity of $3.004 trillion. When we take that value of equity and we divide it by the number of shares outstanding, which we saw was 7.475 billion, we arrive at an intrinsic value per share for Microsoft stock of $402 per share. Now, that's surprisingly close, or I shouldn't say surprisingly, but that's close to the company's current market price of $417 per share. So my estimate of Microsoft stock using the discounted cash flow approach gives me an intrinsic value per share of $402 per share. But remember, I highlighted that I would, if I was doing this more thoroughly, I would have had a transition period before Microsoft settled down into its long-term growth rate of 5%, which would suggest a greater period of above average growth for Microsoft stock. So if we were to make that adjustment and say, well, what if the long-term growth rate, instead of it being 5%, what if it was 6%? What would Microsoft's value be? And you could see it makes a big difference. The intrinsic value per share jumps to $528 per share. And the reason why this jumps up like this is because I've modeled this valuation where when I change the growth rate, it changes a lot of the other assumptions I've used. And so it automatically updates the intrinsic value per share here, which gives me $528.34 if I were to use a higher long-term growth rate, which I think is reasonable in this situation because Microsoft's short-term growth rate at 15% is higher than what I would assume the long-term growth rate would be. And I would assume Microsoft's short-term growth rate would persist longer and not just abruptly transition into the long-term growth rate of 5%. So depending on the growth rate that we use for Microsoft stock will determine what value we get for Microsoft stock. I can do another scenario at 4% long-term growth rate, and you'll see that brings Microsoft's value down to $327 per share. So if you were to ask me what I think Microsoft stock is really worth, well, it would be somewhere between $327 per share and $528 per share. And my base case scenario suggests that it would be worth above $450 per share. So I would expect the growth rate to be persisting at above average rates for a little bit longer and thereby bringing up its intrinsic value per share above this estimate of $402. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.